This is Bloomberg Surveillance Early Edition with Dani Berger and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. The pound falls and gilts rally as UK inflation cools more than expected. The data revives speculation about just how many rate hikes the BOE will deliver. Meanwhile, we get the final euro area CPI print in moments. The AI excitement is back as Microsoft gives pricing details for its corporate AI products. Later today, big tech earnings kick off with Netflix and Tesla in focus. And Wall Street sees glimmers of hope. Morgan Stanley's James Gorman says the worst is over, and investment banking and trading attention now turns to Goldman Sachs. Welcome to Bloomberg Surveillance. This is the early edition. I'm Dani Berger in London. Kriti Gupta is in New York. Kriti, we already had a pretty solid bond market rally, but man, that cooler than expected UK CPI really fueling things at this point.
It is changing the game, even here stateside. But Dani, let me walk you through the market action, because when you're looking at stocks versus FX and rates, it's a completely different story. The stock market not doing a whole lot at the moment. Remember, we are still awaiting a lot of those earnings stories coming out of Goldman Sachs, of course, later this morning as well. We'll get all over that in a second. But what does it tell you about the broader economy right now? It really does feel like Europe is driving the narrative here. Russell 2000 futures higher by 0.1%, and that's the outperformer. If you look at S&P and NASDAQ futures, they aren't doing much. You look at the bond market, though, and that's where all of your action is. To your point, it's all about that UK CPI. Take a look at this. The two-year yield down about 5 basis points, 471, essentially on the idea that if you start to see the super hot inflation in the UK make a little bit of a turning point when you get to those core numbers, then maybe that signals a kind of positive direction for all of the central banks around the world. There is a really interesting read through there. What's interesting as well is that the Bloomberg Dollar Index is working in the opposite direction to the bond market. That usually doesn't happen. It kind of follows the cue of the two-year yield. But the biggest contributor to that is, of course, the British pound. So you're going to walk us through that price action in just a moment. But right now, Bloomberg Dollar Index higher by about 0.2%. And our casual check on Brent crude, as always, trading back above $80 a barrel. Dani.
Kriti, just some breaking lines to bring us. We've got the final print for Euro area June CPI. The core reading is actually ever so slightly hotter than the preliminary number. The prelim number was 5.4%. The final number comes in at 5.5%. Not a huge difference, but it is kind of bucking the trend of some of the inflation readings we've been getting. Now, I kind of have crafted a UK bonanza of a market check for us. I won't go too much into the details of the number itself, because we're going to talk to our economics team in just a moment. But I'd have to imagine if Andrew Bailey ever does any celebratory dances, today would be the day that he does this, because this is certainly giving him relief. And relief is what you feel in this market. In the European equity trade, it's UK stocks that are leading the charge, especially mid-cap ones, FTSE 250 up nearly 3%, especially interest rate sensitive stocks, things like real estate, really strong here in the UK trading session. You mentioned it, Kriti, sterling, that's falling pretty aggressively, weaker by 0.8% versus the dollar. And this is where the gains in the bond market are concentrated and moving it, fueling it throughout the globe. 23 basis points lower on the front end of the gilt curve. That is the biggest move downward since March of this year, when we had all the concern about the banking crisis. We have way backed off of peak bets of over 6% for where interest rates go. We're now around 5.8%. So again, Kriti, it is a market that, at least for now, is sighing a breath of relief.
Yeah, certainly something we're going to keep an eye on, especially when it comes to the ripple effects throughout the rest of the world. Dani, like I mentioned, you are seeing just the UK story have a very real read through into U.S. assets, and I imagine other assets throughout the world as well. We're going to dive into that later in the show. But right now, let's zero in on that topic you were just talking about. UK Chancellor of the Exchequer, Jeremy Hunt, reacted to the inflation data earlier this morning. Take a listen to what he had to say.
It's obviously welcome news that inflation has fallen. And it shows that if the government and the Bank of England are prepared to take difficult decisions, we can win the battle against inflation. But nonetheless, for families up and down the country, prices are still rising much too fast. There's a long way to go. If we look at inflation at 3% in the US, 5.5% in the Eurozone, you can see that if we stick to the plan, we can bring down inflation. And that's what this government is utterly determined to do.
Anna Undrada of Bloomberg Economics joins us now for more on the data. Anna, talk us through the latest CPI print. What does this mean for the BOE? The market's already pricing in or getting ahead of a different rate. Walk us through the read-through.
Hi, good morning. So today's print was good news all around. Essentially, we had a decline in headline inflation, but that was largely expected because of the fuel component and also the food prices. But the best news was really in core inflation, because we did see both services and core goods inflation falling, and that's exactly where the BOE wants to be, and it will be, it will look at the print with relief. Now, I wouldn't say it changes dramatically the rates outlook, but it certainly takes a bit of the pressure off the BOE.
So, if you can put your BOE hat on, your days to being an economist over there, what do you do in next month's meeting then? Do you do 25 basis points? Do you introduce the idea of a pause even?
I wouldn't introduce the idea of a pause. I think it's a bit too soon for that. And the reason is that, inflation is still too high. And although today's CPI print brought us back to a world where, CPI data is playing ball and it's kind of coming in line with or even below expectations, we're still in a world where, risks around inflation persistence are very high. And the BOE needs to lean against these risks. It has said that that's what it plans to do. So really, I wouldn't, the idea of a pause is too premature. And that's why we see rates going as high as 5.75% later in the year. Now, it does take some pressure off, as I said, from the BOE. So we think, even though the August meeting will still be a very close call, it does make a 25 basis points slightly more likely. And that's just because, the scale of the surprises that we've seen over the last month that really drove the BOE into responding with more aggressively with 50 basis points. That's just not there here.
Isn't it nice to get a CPI surprise that's to the downside this time instead of the upside?
It is very nice.
Thank you so much for joining us. That's Anna Andrade of Bloomberg Economics. Now, in tech news, Microsoft has revealed details on the pricing of its new corporate AI tools called Copilot. Bloomberg's tech reporter April Roach joins us now to discuss. April, what exactly did Microsoft announce yesterday that got the market so excited?
Good morning. Yes, so Microsoft has put a price tag, as you said, on its new corporate artificial intelligence tool service. It announced at a partners conference yesterday that Microsoft Copilot 365 will cost $30 per user per month. And this comes on top of what business customers already pay. And this pricing really reflects the strong demand for AI corporate tools and also the cost of running them. Microsoft hasn't said yet when Microsoft Copilot 365 will broadly come into use, but the shares did jump on the news.
Certainly something we're going to be keeping an eye on, especially as it has a ripple effect again through the U.S. session. Talk to us about the chip maker space as well. We got results out of ASML today.
Yes, so ASML's orders grew in the second quarter, beating analyst expectations. And overall demand is still exceeding capacity for the firm. It currently has a strong backlog of 38 billion euros. And the company also raised its financial outlook for the year, saying that it now sees sales growth towards 30% compared to last year. However, the company did flag in its earnings report that customers across various market segments are currently more cautious due to uncertainties, and that the shape of the chip recovery slope is still unclear. And it's interesting to know that ASML recently said it actually plans to slow hiring due to that weakness in the chip sector, and also following a massive recruitment drive last year.
Bloomberg's April Roche joining us from Amsterdam, all over those tech stories. And she's talking a little bit about caution in the tech space, maybe not so much caution in the banking space. Morgan Stanley CEO James Gorman says the worst may be over for the industry's downturn in trading and investment banking. Gorman spoke with Bloomberg's Sonali Basak after reporting results yesterday.
I do believe it's bottomed. Every CEO I'm talking to has tilted to a more forward-looking posture. So I think deals will start getting done. Whether they happen in the back half of this year, I'm not so sure. It might be next year that it comes, but it will be during next year when we see it, if not this year.
Gorman's comments coming as we get news that Morgan Stanley plans to move more than 200 tech developers out of China. For more on this, Sonali Basak joins us now right here on set. Talk to us about the significance, but everything we heard from Morgan Stanley.
Yeah, listen, the optimism behind James Gorman's comments there helped drive Morgan Stanley's stock price up pretty significantly, the most that we've seen them jump since 2020 in a single day. So you have Morgan Stanley now among the big six banks actually trading at the richest valuation on a price to book book basis, even more valuable than JP Morgan. And part of this is because some of the businesses under pressure here are starting to come back. That is underwriting, which is a forward indicator for potentially more mergers and acquisitions. He didn't give you a scale of how much things would come back or when they would come back. But the idea here that perhaps we have bottomed is interesting. Separately, he did speak to headcount here. This idea that perhaps no more job cuts are needed here. But the point he makes is that attrition is only running at about 50%. And so if that is the case, then adding many more people is probably not the case in time for Morgan Stanley. Headcount has swollen a lot over the last couple of years, but again, we're watching costs across all of these banks. They're clearly thinking about it as well. Fees have been under pressure, but at least perhaps we've seen the worst.
Sonali, from what you heard from Gorman and really from all the banks, does it change at all what we're expecting from Goldman before the bell today?
Goldman set expectations pretty significantly here, Dani, particularly that trading would be down about 25%. With that said, there are a lot of questions about whether they feel the same way as Morgan Stanley. Have things bottomed? And if they have bottomed, what does normal look like? Not just for investment banking, but also for trading, particularly investment banking, Dani. Remember, Goldman is much larger than Morgan Stanley in the advisory business, and that has taken the longest to come back. So whatever they say in that arena will be really important for the job story on Wall Street, as well as for Goldman's core businesses, let alone what they have to say about what they're going to do about the consumer business moving forward.
Yeah, a lot of threads to keep track of. Sonali, thank you so much. Bloomberg's Sonali Basak there. Now, coming up, a softer than expected inflation data point spurs a global bond market rally. We're going to get more on that next. And what does it mean for the next round of central bank rate decisions? It's about to be a busy week, and we're going to catch up with Investec's Sandra Horsfield later this hour. Plus, shares of Netflix getting a big boost in more than 7 weeks, just ahead of earnings. More on that still ahead. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Dani Burger in London. Look, of course, the story is all about inflation, but today we got some new numbers coming out of the UK. Now, this has been an especially important sticking point when we look at the global inflationary dynamic, because even though U.S. inflation is kind of decelerating, European inflation is heading in that direction, perhaps not by the same margin as what you're seeing stateside. The UK's inflation story has been extra sticky, and you can really see that in this chart. For our radio audience, stick with me. Basically, you're just seeing a line of headline inflation going up, 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 and really peaking in, I want to say, the fall of last year. Now, it has been coming down. When you look at the core numbers, that has not been the case until today. And now it looks like the bond market especially is pricing in that inflation is in the rearview mirror for one of the stickiest inflationary economies that we're seeing. What does that then mean for the tone that it's setting for the bond market around the world? Let's bring in a true expert. Bloomberg's Valerie Teitel joins us. Valerie, let me put that question to you. What tone does it set for the bond market?
I think this global bond rally is going to extend further. I don't really see much in its way now. And to add to that, Kriti, I think we are quite vulnerable to that first real soft economic print out of the U.S., whether that's a payroll print or the GDP print next week. We are real vulnerable to seeing a decent bull steepening move that we've all waited for. And I think it just might finally come. We've had so much narrative recently about positivity about the economic outlook when it comes to the U.S. that I think it's almost reached a peak, and the next trade is going to be pricing in maybe a bit more of a hard landing as soon as we get a soft print. I think the market is very, very vulnerable for this bond rally to go further.
That's such a good point, because the narrative has just continued to build of everything is great. It's immaculate disinflation. What do you make then, given all of this, that we had those retail numbers come in, the control group hotter than expected, stronger than expected, and the market is kind of ignoring it?
Yeah, no, look, that print was important yesterday, Dani, especially because that specific retail sales control group feeds almost directly into GDP. And next week, we get the first print of the second quarter GDP out of the U.S. So it does bode well for a good GDP print. But the market did basically almost ignore it yesterday. We did still continue with this bond rally. And look, again, the global situation is seeming even better. Inflation may be in the rearview mirror. And it's not just the UK who's seeing terminal rate expectations fall. They really took a hit in the US, last week. And then don't forget, we have the ECB next week, and we had one of the most vocal hawks out yesterday who didn't want to talk about a hike past September. So look, I think that, those situations where we come in the morning and the 2-year yields are 20 basis points higher, I think those are over for now, and I think this bond rally is going to continue.
Valerie, what changes that, though? What puts that dynamic on its head?
The U.S. economy staying stronger than we expected for longer. It surprised many of us just how well it's held up, especially when it comes to the labor market. But there's a lot of seasonals that have kept the labor market tight at the beginning of the summer that start to fade towards the end of the summer. And I think there's a real case that we get some labor market weakening, maybe not in 2 weeks' time at that NFP print, but maybe in the NFP print following. We know that labor market dynamics, at least in the past, once the U.S. labor market starts to weaken, it can weaken quite rapidly. And I think we're just vulnerable to a big shift in the narrative, from a soft landing, from this immaculate disinflation towards a hard landing situation sometime soon. And that's the real thing that makes this situation very hard to trade for any portfolio manager out there is regardless if we get a hard landing in the end, you're going to have to take a swing to a soft landing, at some point on the trajectory on the way there. It's not going to be easy whether we gravitate toward a soft landing or a hard landing, but your book almost has to trade decently whether we get a scare to one side or the other.
What a fun summer we're in for, Valerie. Valerie, thank you so much for joining this morning. That's Valerie Teitel. And for more market analysis, MLive Go is where you want to head on your terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Dani Berger in London. The cases against former U.S. President Donald Trump are piling up as the race for the 2024 presidential election heats up as well. Joining us for more is Bloomberg's Bruce Einhorn. Bruce, walk us through what we know about Trump's legal situation. What do we know about the cases against him right now?
So the latest development is the former president took to his social media website, Truth Social, to say that he on Sunday received a target letter from special counsel Jack Smith. A target letter means that the person who receives it is the target of an investigation. In this case, this is an investigation by the grand jury looking into actions related to the election and efforts to overturn the election on January 6th back in 2021. The fact that he received a target letter does not necessarily mean that he is going to be indicted. However, it's usually a good sign that an indictment is going to follow. Just to put this in context, when the former president was indicted related to the documents case in Mar-a-Lago, that was preceded a few days by a target letter. So the expectation is that this target letter means that there is going to be an indictment probably within the next few days. Speaking of Mar-a-Lago, there was a hearing in that case where former President Trump's lawyers made a request to postpone the trials indefinitely. The judge, Judge Aileen Cannon, who was appointed by Trump and issued some rulings that were sympathetic to him last year, pushed back against that, showed some skepticism about having an indefinite delay of the trial. She also expressed concern about the prosecution's timetable. Jack Smith's office wants the trial to start in December. The judge asked whether that was realistic given the number of classified documents in the case. We're not sure when there will be a ruling on that.
I want to jump in because to that point, I mean, this is a really busy legal schedule for Trump, isn't it, at a time when the former president is also in the middle of campaigning?
You're right, and the argument that his lawyers make is that it's unreasonable, unfair to have him face trial while he's campaigning for president. But there is also the problem that he does face a whole lot of other cases. So there's the in New York State has a fraud case against the Trump organization that's scheduled to start in October. In January, there's the defamation case brought by writer E. Jean Carroll. She already won a first round of that. This is an additional one. There's the hush money payment case in New York. That's in March. And now if there's an indictment from Jack Smith regarding the January 6th events, there could also be a trial in D.C. as well. Yeah. And there's also potentially a trial in Georgia because there may be an indictment coming down there from the district attorney in Fulton County looking into the former president's efforts to overturn the election there. So a lot of cases that the former president is facing.
Yeah. As you laid out there, Bruce, definitely a long list. Busy, certainly someone who's, again, campaigning, I'm sure does not want to deal with. Bruce Einhorn there on the latest on Trump. Now at 5 p.m. Eastern time, we're going to be hearing from Republican presidential candidate Chris Christie on the balance of power. 5 p.m. New York time, 10 p.m. if you're here in London. So stay tuned for that. Coming up next, we're going to get back to this market story as the bond market rally continues in full force. Markets back off of an over 6% pricing of BOE expectations. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The pound falls and gilts rally as UK inflation cools more than expected. The data revives speculation about how many more rate hikes the BOE will deliver. Meanwhile, euro area core inflation accelerated more than initially estimated in June, cementing the ECB hike that's widely expected next week. The AI excitement is back as Microsoft gives pricing details for its corporate artificial intelligence products later today. Big tech earnings kick off with Netflix and Tesla in focus. And Wall Street sees glimmers of hope. Morgan Stanley's James Gorman says the worst is over for trading and investment banking. Attention now turns to Goldman Sachs. I'm Kriti Gupta in New York with Dani Burger in London. Dani, a lot to digest. Stateside, I feel like the focus is still on bank earnings, but on your side of the pond, I think it might just be the BOE.
I think you might just be right, Kriti. I mean, yes, the UK is exciting, and finally, Kriti, for a good reason. I feel like I'm really used to standing up in front of a board of UK assets saying inflation surprise to the upside. This piece of data was ugly. Everything is selling off. That's not the case today. Inflation came in lower than expected. The past 4 readings it came in higher than expected. What a treat to get a surprise to the downside. So this market is rethinking things. For one, in the equity market, we are sending mid-cap stocks much higher in the UK. FTSE 250 up nearly 3%. A lot of the interest rate sensitive real estate type companies are what's leading this charge. The bond market, again, this feeling of relief. We're down now about 22 basis points on the front end of the curve. The biggest drop down since March when we had the banking crisis. So now it's for a good reason that we're backing off of interest rate hikes. Kriti, the only one that I'm not really excited about on this board is a weaker sterling. We're now back below 130, down about 0.6%, because I got a wedding to pay for in euros, and I'm getting earned. I'm earning in pounds, so I don't necessarily like this picture. But, you know, for the UK, it is good, Kriti.
Yeah, and having a very real read-through into the U.S. story. And I got to say, I mean, I'm living the single life and things are equally expensive, Dani. I'm gonna play my single card here. Russell 2000 futures playing a little bit of a different tune. We're going to circle back to that dynamic we were just talking about. But when you look at the stock market, it really is all about the earnings picture. The idea here that you have Goldman Sachs reporting this morning, Netflix reporting after the bell, and of course Tesla tomorrow as well. So the focus is really shifting to the heavyweights and essentially what big names are telling you about what the underlying economy actually looks like outside of the eco data. We do need that corporate lens, but this kind of dynamic that Dani was talking about, having a very real read through into the U.S. bond story, especially when you look at the front end of the curve. 472, we'll call it, on the 2-year yield, down about 5 basis points already 30 minutes into the U.S. pre-market session. This is significant because it tells you that the stickiest part of the world when it comes to inflation, if that's turning over a new leaf, what does that mean for the Federal Reserve specifically? Because, of course, they are going to be looking at the outside factors as well. Traditionally, that means the dollar would follow, but because of the dynamic Dani just talked about with the cable rate, you are seeing the dollar a bit stronger, higher by 0.2%. Again, not following interest rate differentials today, instead following, or really a function, I should say, of the story you're seeing in Europe. And as we talk about Europe and inflation, recession always comes to mind. Brent crude is our check on that. Today, a little bit more optimism. trading at about $80 a barrel, Dani.
Kriti, I want to bring us, again, back within the realm of this UK inflation story. And just want to show you what's happened with peak BOE pricings. At one point, we were, somewhere around 6.5%, 7% as a terminal rate was even thrown out there. But now with this data in hand, we've now moved back below 6%. In fact, pricing for a 50 basis point hike next month, it's something around 50% odds that it will happen. So we've definitely moved off of that. Let's talk more about what we're going to get next month. Joining us now is Sandra Horsfield, economist at Investec. Sandra, first off, I mean, you and the team at Investec thought that above 6.5% was too high. So you definitely get kudos for that. What about where we are now? Does that terminal rate pricing over 5% make sense to you?
It seems about right at the current juncture. Our forecast is for 5.75. If anything, the data being so much better than had been hoped for and so much closer to what the Bank of England had expected is a positive sign. Perhaps we won't even get a 50 basis point rate hike. It could even just be 25. For now, we're sticking with 50, but it's a much closer call than it had looked just a few days ago.
Yeah, and again, it is this sense of relief. But I feel kind of slightly scarred from a lot of the UK data we've gotten that's surprised in an ugly way. How much do you want to read into this versus prepare for maybe another upswing in inflation?
I think we should certainly not get overexcited here. If you look at some of the details here, certainly petrol prices were a big factor that drove down the overall figures. So these sort of big swings in energy prices have had a big impact. If you look at the core services measure, which is something that is very central to what the Bank of England is doing, that fell but by 1/10 of a percentage point. So it's not a huge decline. It's not exactly the sign to pop the champagne here that this is all under control.
Yeah, the champagne's still expensive.
It's still expensive. We'll keep it in the bottle.
Well, Sandra, talk to us about the read-through here. I want to, before you answer, just bring you some sound that we heard from Robert Kaplan, of course, a former member of the Dallas Fed. He says the Fed's rate decision is just about a week away. He in an exclusive interview, he talked a little bit about it. I want you to take a listen to what he had to say.
I do think the Fed will raise rates next week. If I were at the FOMC, I would do that also. And while inflation is improved, and the economy is very much a mixed bag. Manufacturing's weak. Anything interest sensitive is weak. The service sector is very resilient. And I think the concern is that the service sector inflation there is going to be sticky for some period of time. And that's the rationale, I think, for this next rate increase.
So, Sandra, you're talking about a pullback in UK inflation driven a lot by the petrol story. But then stateside, we're talking still about that sticky service inflation. To what extent is what we're seeing overnight from the BOE, or excuse me, from the UK inflation data, having a read-through into the US story? How do you connect those dots?
I think at the moment there are certain commonalities everywhere. We had the energy story, which is somewhat different in the US as a net energy exporter, but for consumers it's still contributed to higher prices, and now it's not. So that's a general common story. Food price inflation too is a relatively common story. I think on the labour market side and therefore the wage side, there are also clear commonalities. We have labour shortages still that are visible in the US data. We're still seeing it in the UK data too. So stickiness of core inflation is certainly a concern that will probably push rates just that little bit higher still, just to make sure we don't get entrenched inflation for a long time.
Sandra, when we talk about recessions, they don't really come gradually. They kind of come all at once. You start to see a very broad era of things like layoffs, for example, or a big decline in growth. It doesn't feel like the market is pricing that in. In fact, a lot of the economists and strategists on the street are saying that narrative just no longer exists. Sandra, what is the case here? What are the odds here for that hard landing, for that recession to still form?
I think there's still a decent chance we'll get more softening that broadens out. We have to remember we went into this period of much higher rates with a buffer of a lot of excess savings on the part of the household sector. That has helped cushion the downturn. It has helped stretch budgets just a little bit longer than usual. But we can't resist gravity for all that long. So eventually, we do think that a weaker growth period is likely to be in store. And enough to actually perhaps even result in a recession. We wouldn't rule out that narrative quite yet.
Is the soft landing euphoria premature then?
Perhaps. On the other hand, there's very little to suggest that we'll get a crash landing. And I think that's the optimism why markets haven't really sold off that much, is because it's not looking all that weak. If we're looking at a recession, then it will be a very mild one by historical standards, by the looks of it at this point. And that's clearly good news.
Well, if everyone loves to talk about the long and variable impacts of central bank policy, if we've seen 500 basis points of rate hikes, it hasn't really come through yet, but we are seeing inflation come in. Is there a sense that then when it does come through, it's going to come through hard? Again, if what we're seeing at the moment, inflation falling, isn't necessarily because of those interest rate hikes yet?
That's certainly a concern. And it's a balance of risks that central bankers have got to weigh up here. Do you step hard on the brakes until you see firm, hard evidence that inflation has gone down, when you think that it could perhaps take another year and a half or so till you see the maximum impact on the economy? And have you then gone too far? That's the real worry. And I think that's the sort of point where nobody's quite certain after such a long period of low inflation exactly where enough is enough. For now, we're feeling our way. So data dependency is the key word that we're hearing all across the world on both sides of the Atlantic for sure.
Sandra, there was a narrative baked into this market, which was that this time might be different when it comes to that 12 to 18-month lag in monetary policy. Then it kind of felt like there was this reversal where maybe that lag might be shorter. Where do you stand on that debate?
I think at the moment, the sort of slightly longer than usual side still seems sensible. I think, as we mentioned, excess savings have probably given more of a buffer than usual. So that masks a bit the impact that we would have had otherwise. We also have many more households, certainly in the UK, that are now using fixed rate mortgages rather than variable rate mortgages. So the sort of transmission mechanism that you would see on the housing market is delayed in the case of the UK, because it simply takes us to get to the point where households actually reset their mortgage rates to feel the pain. So all of this probably does add up to a somewhat slower pass-through than beforehand. Just how slow is, of course, very difficult to gauge with any degree of certainty.
Sandra, are we still paying attention to the effects of quantitative tightening, or is that something that's kind of in the rearview mirror?
I think it's probably a more important factor than is generally acknowledged. The impacts of quantitative tightening might not be on the short end of the curve so much, but more on the long end of the curve. So longer-term borrowing costs are affected by this. And of course, longer-term borrowing is something that very much features in the investment decisions that are taken for things such as real estate, for companies when they make longer-term investments. So it's not just the short-term rates that matter. And so quantitative tightening there is something that is going to depress activity in its own right, as well as what's happening in terms of short-term policy rates.
Yeah, Sandra Horsfield over at Investec. Thank you, as always, for joining the program. So a little bit more optimism from the economy, a little bit more optimism perhaps in the media space as well. Netflix shares rising the most in over 7 weeks as the company gears up to release its second quarter earnings. That coming up next. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Dani Berger in London. Earnings season continues, this time in the tech space. Netflix due to report this afternoon. Investors looking closely to see how the company's recent crackdown on password sharing may be impacting the business. The share is already higher by about 1.4% in the pre-market. Geetha Ranganathan of Bloomberg Intelligence joins us now to walk us through it. Geetha, before we get into the nitty-gritty of Netflix, I want to come back and talk about these labor strikes first. The idea that you now have, they're not only the Writers Guild, but a lot of the actors unions as well joining these strikes. Talk to us about the read-through it has on Netflix and some of its peers.
Yeah, that's a great question, Kriti. And, you know, ironically, Netflix is actually the architect of a lot of these problems because one of the reasons why both the writers and the actors are striking is because of the shift in the model that kind of the Netflix rise has kind of brought upon the media ecosystem. So there are fewer and fewer residual payments thanks to this whole streaming revolution. And that's actually one of the reasons why, they're even striking in the first place. But ironically, Netflix will probably not be hurt as much. So what's going to happen is it's obviously shut down production completely. Where, as we kind of look at the fall TV schedules, it's obviously going to dry up. And I think that's eventually going to shift more and more viewers to Netflix. So, Netflix actually might be a beneficiary. Also, think about the whole Netflix content strategy, right? One is they've not just looked at Hollywood and local productions. They've really kind of gone overseas, ramped up on, overseas, international, foreign content. As we speak right now, they probably have about 25 or 30 Korean shows that are in production. They've gone all across the world. So again, these strikes not going to impact them as much in the near term. Of course, if it's a prolonged strike, then they could start to see some impacts, especially as we get into next year. Because remember, Stranger Things, their big hit series. Of course, production has stopped on that, Emily in Paris. So a lot of these hit shows might get impacted, but nothing in the near term.
Yeah, and they probably have a lot of viewers like me, Geetha, who unfortunately love them some trashy reality TV shows too. I just while we're on the topic, Geetha, I wonder about the impact on things like reputation. I'm drawn to Fran Drescher, who is, of course, of The Nanny, the SAG-AFTRA president, who gave an interview to Variety responding to some really strong language Bob Iger said about the strike, basically saying it's at the worst time. She called him a land baron of medieval times, which is a sick burn, and basically said he was out of touch, he was disconnected. I mean, if you're having, again, the star power of some of these people calling out Bob Iger, calling out Netflix, is there any lasting ramification of that?
I mean, this is now kind of almost, devolved into kind of class warfare, right? So people, obviously, the actors, the writers, they're very disgruntled with kind of media executives making so much of money despite the whole industry kind of being in shambles, being in turmoil. And I think Fran Drescher's comments exactly kind of reflect that mentality, because we really don't know where the future of TV is going. We saw some comments from Bob Iger that seem to suggest that they really no longer think that the linear TV business is even core to the whole Disney brand anymore. So obviously the future looks extremely bleak. The writers and the actors, content is the lifeblood of any media operation. I think it's only fair that they think that they should be compensated appropriately for it. And that's kind of what we're seeing reflected in all of this commentary.
Going back to Netflix, Geetha, because we're going to get their earnings results, as Kriti mentioned, after the close today. What are you expecting to see, especially when it comes to some of the crackdown on password sharing?
Yeah, so there's obviously a lot of optimism building into this quarter. We've obviously seen this huge stock outperformance this year, and that's a result of these two main efforts. So one was the launch of the advertising tier late last year, and as you just pointed out, Dani and Kriti, the password sharing is obviously going to be the most important topic on everybody's mind when they report, because this is, the first quarter after they've kind of rolled out the password crackdown, both in the US as well as in over, I think, 100 markets across the world. So the interesting thing with passwords crackdown is that it not only allows you to monetize those piggybackers, but most investors think that it also is kind of going to give a boost to the ad tier. And that's a good thing, because that results in new subscriber growth, and it actually results in increased monetization. So there's obviously a lot of, I think, optimism that is built into it. One of the interesting things is that when Netflix had spoken last quarter, they had spoken about, of course, rolling out this password crackdown, but they'd also cautioned investors. They said, don't get ahead of yourselves. We've seen that when we initially roll this out, there's a lot of cancellation activity, there's a lot of noise, there's a lot of volatility. So brace yourselves for that. But actually, what some of the third-party tracking services have signaled is that there hasn't been that much of cancellation activity. So that's been a big positive, and that's, I think, caused a lot of euphoria kind of coming into this second quarter earnings report.
Geetha Ranganathan of Bloomberg Intelligence, we thank you as always walking us through the crucial story in the media space and, of course, those Netflix earnings. Coming up, a look at some of the market-moving events to watch throughout the day. That's next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Dani Burger in London. Kriti Gupta is in New York. Now let's get a look at some of the heads that we are watching out for today. Of course, it is the bank earnings season that rolls on. We're going to get Goldman Sachs and a whole host of regional banks that report their earnings before the U.S. market opens. Then we're going to get some U.S. housing starts data. That will be at 8:30 a.m. Eastern time. The data last time seemed to suggest a bottom. Will be interesting to see what the read-through is on that. Then the Bank of England Deputy Governor Dave Ramsden will speak at 12 p.m. How will he react to that cooler than expected CPI data? Then big tech earnings come after the close. We will get Tesla, Netflix, and IBM on deck. Kriti, that is a very busy day for you.
Yeah, massive when it comes to the tech story. And of course, going to have a read through already into the pre-market action, which brings us to some of the stocks we're watching, because I want to start there in that tech space, Dani. Microsoft, of course, catching a lot of attention yesterday's session. This morning is no exception, higher by 0.8% in the pre-market. This comes after, of course, they set a pretty expensive price tag for their new corporate AI products called Microsoft 365 Copilot. But Dani, if you're actually looking at the numbers here, it looks like it's going to cost about $30 per user per month on top of what business customers are already paying. And the expectation is that pricing isn't necessarily going to deter a lot of those businesses.
The funny thing about this, Kriti, and you and I were talking about this during the break, is we both kind of realized we have no idea what normal pricing for Microsoft stuff is, because at least for me, I've either been a child or student or employee who's had their Microsoft suite paid for. Kriti, I've Googled it. A Microsoft 365 personal cost is about £60 a year. I think it's something similar in dollars. So £60 a year versus $30 a month per user. Yeah, that's expensive.
It is expensive, but also keep in mind that this is a business kind of audience that is really looking out for this. So if you're looking at it per employee, those costs aren't necessarily going to be monitored from an individual perspective. They're going to be paying it as a whole. So I don't know. For you and me, that might be expensive. From a business corporate side, perhaps not as much, which brings us perhaps to the chip story and demand that we're seeing there as well. ASML, for example, posting some pretty positive earnings. They're saying their orders are rising. Of course, as a chip gear giant is defying that sector slowdown. We know there's been a lot of pain in chips broadly, but ASML was higher earlier in the session. Looks like now those ADRs are down to the tune of about 1.2%. What's interesting is that the read-through was pretty positive for one of the biggest kind of tech players and semis players in the U.S. AMD, NVIDIA, Qualcomm, all higher. And Qualcomm getting a little bit of an added benefit here, higher by about 0.3%, because they said that their Meta's AI product is going to be running on Qualcomm chips. So it's interesting to start to see that divergence. Do the chips story in the U.S. follow the slowdown you're now seeing in ASML shares?
There's also a weird regional divergence. The ADRs there are moving lower, but the European stock is up about 0.5%. I'm not really sure why that is. I'm sure someone smarter than me can message me and let me know. The other interesting thing about that, Kriti, on ASML was the CEO saying anything about China when it comes to U.S. regulations is just speculation, and from what they know so far, it's not going to materially impact them.
Yeah, the Dutch government story is getting very interesting. It kind of stuck in the middle of its largest customer and, of course, its alliance with the United States. So something we're going to be monitoring quite closely. And Dani, we got to end very quickly with a quick check on Netflix shares. We just had Geetha Ranganathan over from Bloomberg Intelligence join us, and she was saying, look, it's all about that password crackdown. You're already seeing the shares higher by about 1.4% in the pre-market after posting its biggest rise in over 7 weeks ahead of earnings. My question is, if they're investing a lot internationally, what does the dollar weakness signal for that company?
Yeah, I mean, certainly they'll have some FX hedges, but yeah, I mean, especially when it comes to just overall consumer sentiment. Also, you can add Netflix to the list of things which I'm embarrassed to have never paid for and not actually know the cost for. Kriti. Well, that's it for us here at Early Edition. Surveillance is up ahead. They'll be speaking with BNP, BlackRock, and Renmac. This is Bloomberg.